Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, August 11th, 2010. We had a very volatile market today with higher yielders falling very sharply against both the dollar and the yen. Here we're looking at the euro dollar and we see the very sharp slide. If we measure it from high to low of around 300 pips, as we saw a flight to safe haven as investors became concerned about global growth and decided to choose safety over risk. The sharp slide comes after we saw the euro have a bit of a pop against the dollar in the end of yesterday's trading following the FOMC decision, but that euro rally failed to move above the 1.3250 area, really stalling above 1.32, and overnight we had some weak Chinese data followed by some downgrades of forecasts by the Bank of England, and with equities, global equities suffering and stocks in Europe falling more than 2%. When we came into the New York session, we saw a follow-through and further slide, and as you can see, we went all the way down to the 1.2860 level. That wiped out around 2 to 3 weeks of gains. Right now we're at our lowest since we were in July 23rd. We cracked through the 1.30 area, and the next level of very important support, it would be the 1.2740 level, and that is if the risk aversion that we've seen really throughout this whole week continues. So whereas before, negative news from the US had been weakening the greenback, now the gloomier assessment by the Fed yesterday comes along with a weaker Chinese manufacturing data, and with the broad slide in equities, we saw that the dollar gained on the back of its safe haven status. In China, we saw industrial production grow at its slowest pace in 11 months, retail sales growth eased, and new loans climbed less than expected. So that was the catalyst for the start of this new worries over global growth following what we had heard from the Fed yesterday. The yen was a strong performer today. Here we're looking at the euro-yen pair. We see a very sharp slide during the session. We entered the trading session around 112.50 and fell all the way down to 109.75, and we're extending our losses as we enter the next global session. We're filming this at around 5:20 p.m. Eastern. If we take a look at this pair, we had been trading sideways for the most part over the last few weeks, and we broke below our important support, our low from July 30th at around 112 early on in the trading session, and we just continued to fall, breaking through our low on July 22nd and hitting our lowest level since July 6th. Now the next level of support will probably be the 107.50 level if we continue to see this risk aversion and fear in the markets snowballing into further equity losses. Taking a look at the dollar-yen pair, we had declined as we entered the European session and broke below the 85 level, our low from August 6th, and we actually dipped to 84.70, which was a 15-year low for the pair. However, the dollar did manage to rally following that test of its 15-year low, but only back to the levels we had seen during the Asian session, and we may see a fresh round of pressure on the dollar as we enter tomorrow's Asian session. The thing here is that the Fed's announcement of lower economic growth forecasts and its decision to keep its portfolio of securities from shrinking really hit US Treasury yields, which were down sharply, and we saw those yields falling again today. And the exchange rate between the dollar and yen is very sensitive to the different interest rates and how the spread between interest rates in the US and Japan compare to each other. So with 2-year Treasury yields at record lows, currency investors have little incentive to buy the dollar when the yen is perceived to offer more safety. So we're going to see if we have another attempt to break below the 85 level, and if we hold below that level in that second attempt. Now, the US dollar did do very well against higher yielders, those currencies tied to global growth and to commodities. Here we're looking at the US dollar against the Canadian dollar, and we see a sharp rally. We had tested our level of resistance, now turned support at 1.03 at the beginning of the global session. We ran up against resistance at 0380, our high from yesterday, but we smashed through that in the New York morning session, reaching around 1.0470 in the later New York trading session. And as we enter the new global trading session, we look set to move above even that. So here we see the pair retracing more than 2/3 of its fall from July 20th, with our high there being around 1.0580. So if we continue to see risk aversion in the markets, perhaps we have some retracement first, but if we continue to move upward, that'll be our next very important level of resistance. Oil prices are down 3.6% or close to $3 today, so that definitely heavily pressures the Canadian dollar. US stocks were off. Dow Jones Index was off 2.5%, while the Nasdaq and S&P were down 3% and 2.8% respectively, though most of those losses did come towards the open of the session. Taking a look at the pound dollar, we saw sterling falling following its rally in yesterday's session after the FOMC meeting. We broke below our support at 1.57 and reached a low of 1.5624 as we filmed this video. So we definitely topped off following this rally. We had mentioned that in the earlier videos that this 159.60 and the 1.60 level had been acting as very important resistance. We have broken a couple of our trend lines, and we had even broken below our moving averages. So we are definitely seeing a retracement now in correction to this rally from July 22nd. Now, the Bank of England had cut its forecast for UK economic growth and long-term inflation in its quarterly inflation report, which was part of the catalyst for the buildup of this negative investor sentiment that we had seen in today's session. Turning now to the upcoming fundamental events, not that much on the fundamental docket, so traders should keep their eyes glued to what will be happening with equities. Tonight we do have Australia posting its monthly jobs report and unemployment rate, as well as a measure of inflation expectations. Overnight, Japan releases a measure of household confidence, and the Eurozone posts its industrial production figures. Tomorrow in the US, we have two releases, jobless claims, as well as import prices. So nothing too major here. So like I said, continue to look at equities in order to gauge the direction of what will be going on. And with that, I wrap up today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.